Today we're going to be going over September week 1 pre-markets of the Pennyland. Before we do that, our quote of the day is "I remember when I ain't have a jacuzzi" by DJ Khaled. The goal of this PowerPoint for me personally is to identify certain patterns in the pre-market. We're going to categorize those pre-markets. And of course, the whole purpose of this as well is to use less brain power when it comes to actually trading. When we look at a structure of pre-market, we can already tell if it's going to be bullish or bearish based off of this research. So some certain criteria that we're going to look over is looking at day one tickers only. There could be a few multi-day sprinkled into the results, but we're looking for fresh news. We're looking for tickers that are less than $10. We're looking for consistent volume. We're looking for pre-market structure and stuff that is gapping up over 10%. For the pre-market structure, we're also looking at if it's fading into open, flat, or no pre-market at all. Here are a few examples. This would be flat or pushing into open. This would be fading into open, and this would be no pre-market. We're also going to look at price range under $1 between 1 and 3 and over 3. So the outcome of this, again, we're trying to find tickers that can produce momentum or are going to be bearish so we can stay away from the certain tickers. Examples of momentum in our books are stocks that, for the most part, they can break pre-market high. They have some form of bullish structure. So in this case, there's some flags in here that push upwards, has an upward trend line. And for bearish or faders, we're looking at stuff that's most likely just fizzles out after open bell. So we're going to start with the price range. So there was a total of 11 tickers that we thought this week had momentum. And so running through this, we're going to see that 1 out of 11 were under $1, so only about 10%. 8 out of 11 were from 1 to 3. This is opening price. And 2 out of 11 came from stocks over $3. So off the bat, we're seeing that stocks from 1 to 3 is pretty much where the money is at. So over like 75% total. If we're looking at the faders, we have 9 out of 16 were under $1. So that's a drastic difference from what the momos were. 6 out of 16 were from 1 to 3. 1 out of 16 were over 3. So about over half the fading stocks were penny stocks. This has been a common theme for the past 3-4 weeks. We haven't seen a lot of penny stocks do pretty much anything outside of a couple flags here or there or a mid push here or there. Predictability wise, very hard to find anything that has been working. So personally, I've been staying away. So just comparing these from the momentum statement to the faders, we have under $1 chances of something producing momentum was 10% this week and 9% to produce fading. That's why we're staying away from under $1 tickers. From 1 to 3, we had 8 or 57% having momentum. That's a lot stronger than the under $1 chances. Over 3, we only had 3 total stocks, so I'm not really going to take 67% at face value. If we had over 10 stocks and 7 were momentum, that's different. But to me, we can't do a whole lot with this number, unfortunately. So we're just going to have to ignore it for the most part. So kind of a recap of the price. We're going to be cautious of stuff under $1. Stuff ranging from 1 to 3. There's an equal chance basically that can be bullish or bearish. You just have to kind of wait and see which one's going to produce. And then anything over $3, we only had 3 tickers this week, so it's hard to project out next week what we're gonna see. Comparing the weeks, so like I just talked about, we the under $1 chances last week were around similar. We had less this week. We did have Monday off, so that's to be expected a little bit. But the percentage-wise was the same. From 1 to 3, again, pretty much the same, 14 to 15. Over 3, so we had 11 last week, and a lot were bearish. So with 3, we can't really do much with that. So we want to stick to stuff that's in the $1 to $3 range. So now we're going to move over to the price action in pre-market and how it is shaping up before it opens. For the momentum stocks, 0 out of 11 were fading into open. So that's a big sign for me. If something has lower volume and it's kind of ski sloping near the open, I'm staying away from. 8 out of 11 were flat. We're pushing into open, and we had 3 stocks that had no pre-market. So we're getting a couple each week with no pre-markets. So if you have scanners, it's good. For me, I kind of like to avoid scanners. They drive me fucking insane. So I like to stick away from that. But the main focus here is that we want to stick to flat and pushing into open. For the faders, we had 10 out of 16 fading into open. So that's 63%. So that's a drastic difference from the momentum ones. 6 out of 16 were flat or pushing into open. And we're not going to track the no pre-markets for faders. So over half of the stocks were fading into open and produced no momentum. So comparing Momo versus faders, we have fading into open chances this week where 100% was going to fade. Obviously, that's not really the case most of the time. We're not going to ignore it completely next week, but it's just, again, a bearish sign of something's fading into open. Flat into open chances, we want to stick to stuff that is flat going into open with a 60% win rate there. So just another recap. Stocks fading in the pre-market had a 100% chance of fading. Stocks flat into open had a 57% chance of being bullish. So comparing last week to this week, similar results for the fading. We had 15% here that faded and 85%, or sorry, 15% with the momentum and 85% fading. Basically similar results. We want to stay away from that. Flat into open, we actually had quite a lot of tickers last week and a lot more faded this week. Kind of switched a little bit. A lot of this range produced momentum. So we're going to stay away from fading and look at the flat into open. So if we look on this from a scale bullish to bearish, if we combine both price action and the price range, what we want, an ideal ticker for this week for Monday would be something that is in between $1 and $3 and is flat and pushing into open with volume. Anything over $3, we're going to be neutral on it. It can, it can't. We'll see. You know, depending if it's over 3 and flat into open, okay, maybe. And then stocks under $1 and fading into open is like the ultimate kill switch to stay away from, especially with low volume or kind of outski. So with that being said, we're going to just kind of review and go over each of the tickers in our study here. So some examples. So APTO, a nice example of a fading stock into open, kind of choppier price action. The volume is drying up a little bit, under VWAP, under the 200 daily. We want to stick away from these type of tickers. All right, so this is an example of one that is pushing into open and does a high of day break here and then fade. We saw a lot of those. This is another under $1 and fade. This one is also under $1 and fade. This one was flat and just kind of fade away. One could say that there is bullish action here. This week was a lot of flat stuff like this that didn't really break the pre-market high. So, you know, it all depends on what we think is bullish, what we don't think is bullish. To me, this is still bearish. This one is a fader, although, again, we could say that this was a momentum. We did have a flag here. This was a tough week to kind of sort momentum versus what is fading. So it is what it is. This one also faded off to me. There was one push and then it just faded. So there's real no sustained moves above VWAP, above the 200 that I would say is momentum. Things like this that pop up and then just start to fizzle out. Never touch those. Another one of those as well. Another sub $1. This is one of the ones over $3. Wint started to push. It was like, oh well, maybe it could do something. As soon as you see this halt down, we're out. Let's see, mod. Of course, anything else over this 200 or the yearly highs has also been very bearish. So that's something else to consider. YYGH with a name like that, with a ticker symbol like that, we're gonna short the fuck out of that. SITA, the volume dried up in this area and it was fading into open. If this kind of had volume and looked better, it could have done something. And then we also have this random push. A lot of that this week, a lot of that to be covered on pattern recognition. Another one that's fading. This one was pushing into open. Sub 10-cent ones. I hate them. So we're gonna get into momentum. This we saw a ton of this dip below, view up, and then grind up. So to me, this is breaking pre-market high. Then you have some midday push. Vuzi, we had no pre-market with Fee-Fi. Fee-Fi just went straight up and then faded. BNRG, nice, some couple of flags here. This was a nice momentum. WISA had this open like this and then push. This one is also tough because usually I wouldn't consider this momentum, but this market this week was weird where it still produced some flags. So like here you can say double bottom, it's holding this trend line. We had some volatility that I think was momentum. So similar thing here where it's like this, if it did this push and then faded, I would have said fuck that. But because it held and held, I get some momentum in there. Hoth did the same thing with this uptrend at the beginning of the market open. Wheeler went fucking nuclear, no pre-market, and then just consolidated for about 30 hours and then decided to go. Nice to see, but I think it only ran once, and then it ran pre-market over here somewhere, but then it got cooked the next day. BEMP did a nice midday squeeze. We're seeing a lot of this kind of price action. BLMZ was probably one of the cleanest this week as far as push out the gates instead of, you know, fading here and then popping and then fading. This one actually went, sustained pre-market highs and did several legs up to 280. It was pretty nice. Multi-day runners real quick, just to get a look. ASST had some push, but it was on lower volume. Both of these nuts again. With the squeeze here, this is probably the best one. Another good push. This one and the one I just reviewed were probably the best this week. Now we're starting to get into like low volume. ASST again, that was kind of actually nice. Fee-Fi faded, low volume. Nothing there, low volume. So overall, we're going to go back to our game plan here. So again, stocks from 1 to 3 is our key points. We want that flat pushing with volume. We might add volume into this at some point, but it is difficult. You gotta break down how much volume, what's compared to the daily average. We'll see if we can get that in later posts. And then stocks over 3, we're kind of neutral on. Stocks under $1, we're still very bearish on. Until we start seeing something that blows shorts out of the water, we're going to stay bearish on penny stocks. And that is it.